Everybody, this is Michael Krieger coming at you from a very rainy Boulder, Colorado on the day before the Fed announcement where the Bernanke and his henchmen of money printing maniacs will spew more nonsense and potentially fiat monopoly money on the population of this planet. So the reason that I decided to record this today is because the consensus seems to be for QE3, or the expansion of the Fed's balance sheet, the creation of new money to buy securities, all of the same thing. And I don't think that that's what we're going to see. The reason I don't think we're going to see that is because the Fed and the central planners globally have essentially achieved, at least for now, what they want without having to do much. They are just jawboning asset prices to the levels that they want. And as you know, equities in the US are close to all-time highs. Treasury yields are extremely low, even though they've come up a little bit lately. So, I think why rock the boat? I think that they may extend the low rate language out to 2015. I think maybe they cut the amount of money that they paid banks on excess reserves, but I think that's it. That said, I also believe that they're terrified of disappointing the market, and so what they may do is threaten very aggressive action down the road. So say something like, well, we don't feel like we need to do that much now, but if things get worse, we will, target nominal GDP or something like that, which would be which would probably be the spark that unleashes monstrous inflation in the US, which is why they don't want to do it. Or at least they want to hold off on doing that as long as possible. So that's my feeling. That said, if they do announce something like GDP, nominal GDP targeting, I mean, that's it. That will, gold will be heading momentarily within the next few months straight to 2,500, silver to new highs for sure, 75 and 100, and so look out for that. But I don't expect them again to announce that this time. So we'll see how the markets react. I think what's important is to understand that in the last couple of weeks, funds have had to scramble a lot. I think they've covered a lot of shorts. I think nobody is really positioned for a big decline. So maybe you get, a nice little steep, quick drop if they don't do QE, which, as I mentioned, I don't think that they will. Finally, on the metals, I expected, again, I expect a raid. I mean, that's what they like to do on these days. You saw a little bit of one today. I would expect more of that tomorrow. And I would be buying it, buy the dips. I think that right now in particular, we are in a seasonally strong period. We've had a year plus of consolidation, and this is the move to new highs in precious metals. So, you want to use the volatility when the Fed or central planners or whoever gives it to you to buy. But you also want to pick your spots, and you want to assume there will be a beatdown, and I think you want to take advantage of that beatdown by buying. So hope this helps. We'll see what happens tomorrow. It should be interesting, but those are my thoughts. Signing off. Talk soon.